right. Welcome, welcome, welcome. It's your boy Trust My Level. So I'm here with the Futures 101. It's pretty much 99.5. A very brief overview. So let me go through this real quick. All right, so this is a disclaimer that anybody that's taking the course from me or anything like that is very used to. I'm not a financial advisor. Anything you see or hear on this presentation is not to be taken as financial advice. There are significant risk involved in futures, options, stock market, crypto, or any other derivative of the stock market that you can try to trade. And you can lose more than you put in with certain securities. Do not risk more money than you can afford to lose. And anytime we talk about hypothetical gains, they're not representing future results. So if you see something that's simulated, it's not representative of future results. And yeah, just be safe, because this is a very risk averse. I'm very risk averse when I'm playing futures versus options. So let's just be safe out here. All right, so here's my agenda. I'm not doing slides because I don't really like slides. I'm just gonna go to charts. So here's the agenda. What are futures? Why are futures used? How do futures differ from options? What do we trade and what broker? What is the value of a futures contract? I'm just gonna talk about ES. What is important to learn with futures, and how important is risk management? And of course, I'm gonna encourage practice, and more practice, because if you don't practice, you're gonna get in here and get destroyed, okay? So we're gonna make sure that you are getting on practice accounts, getting on sim accounts. If you get to Ninja Trader, or wherever you're gonna go, you gotta make sure that you practice, because this is coming with repetition. Everything is with repetition. And of course, Fibonacci cheat code, I'm definitely gonna plug that because Fibs will definitely help you in the futures market. So along with some other things, but that basic thing is for Fibs. All right. Let's get on over to charts. First, what are futures? I'm just going to talk now. So futures, let me just change the screen real quick. So futures right now, they're a derivative. So when you hear derivative, people are like, what is that? So it's basically using a mathematical calculation to get us to the price based on an index. So what's an index? We're talking about SPX, we're talking about Russell, we're talking about Dow Jones, we're talking about NASDAQ. Those are the index. So if I'm looking at an index, I'm looking at something like NDX, DJX, RUT, and SPX. Everybody's familiar with SPX because you hear SPX all day, every day when somebody's trying to trade. So what the futures are, and I'll just break this down to just an analogy that I use. So people that play, you might not play Call of Duty, but let's just say you were watching. Let's say you were watching something and you wanted to throw a water balloon. There we go. I'll just use a water balloon. So the person that you're aiming at with the water balloon, that's the index. Okay. So the index is the thing that's making a future move. Okay. So the index is the stock that you're tracking. And then the futures are looking ahead. So if the stock was moving, I have to look in front of it. Then I have to throw the water balloon in front of it for the person to meet the water balloon whenever it comes into contact with them. So that's what a future is. It's in the future. It was described to me as being 30 days, the price of SPX for ES. So the price of SPX, 30 days in the future, as if the future was today. Okay, so that's when we say futures, we're looking at a contract that is looking further out as if that day is today. All right. So again, it's a derivative and it's used to buy and sell assets at a future date at an agreed upon price, such as oil. Such as oil, soybeans, ETFs, stocks, crypto. So anything that you can think of, it probably has a future associated with. So, and I know you've heard that definition of, hey, we're buying and selling at an agreed upon price at a future date. That's the same thing as options. So, yeah. All right. Now back to the second question. What are futures used for? Just like I just said, companies are using these to lock in prices. So if we were looking at oil, let me just bring up some futures here so you know what we're talking about. So we have feeder cattle, we have hogs, they're trading copper, they're heating oil, the Japanese yen, coffee, anything you can think of it probably has some type of future connected to it. Natural gas, the metals, all of that. So companies are using this to lock in prices of a commodity. Let's say you were looking at sweet crude oil or something like that. And here comes an airline company and they're like, hey, I want to make sure, depending on where I think the price is going to be, let me lock that price in now. So now I'm going to lock it in at a price that is, let's say today it's $100 a barrel, but they expect it to be $200 a barrel. So they're going to buy futures contracts to lock in the price at $100 a barrel for, let's say, 2-3 months from now, when they expect it to be at 200. So it's just a hedging instrument for their commodities. And it's protecting them against, price swings. And like I just said, the $100 and $2 they're expecting it to be. So they're doing analysis. Hey, what's happening around this time? Just like you hear people say, we got a sector rotation. We're looking at this price to rotate. Oh, with the price right now in the summer, it's not that hard. I can go in and get oil all day. But then here comes the winter. The demand for oil is going up. We got to fuel the plants that are producing heat and all these different things. So now the price of that goes up. The demand goes up and the supply goes down, price goes up. So they're trying to make sure they hedge for that price. All right. Next question. How do futures differ from options? Okay. So how I explain ES. So ES for us, if you're not familiar with Greeks, I'm just going to, just say this right now. So with the Greeks for delta, so let's just say we had a delta contract of delta of 50 with ES. So that means, or with the options contract. So that means that you are going to get 50 cents per $1 move that the stock moves up or down. Either you're going to lose that 50 cents or you're going to gain the 50 cents. So with futures, we are always, so ES is at a 0.5 delta. So it's a 50 delta all the time. It doesn't matter if it goes up by $1,000, if it goes down $1,000. It is at 0.5 delta all the time. So now, here's one of the big things that scares a lot of people, the leverage. Okay, so futures, this is one big thing that's different with options. So yeah, you can have a margin account, but with futures, for one ES contract, you are controlling between $109,000 to $120,000, depending on the price of the contract. So you're controlling with some brokers have $500 rule, some brokers have $2,500 rule. With that $500, you are controlling an asset that is worth $109,000 to $120,000. So this is where a lot of people get scared because they're like, oh my gosh, I got 500 or I got 1,000. Now I got 2 contracts. Now with that $1,000, I'm controlling $240,000. I got 10 contracts. I'm controlling $1.2 million with 10 contracts. So, and this is where a lot of people, they get scared and get out of it and they're like, oh, I don't want to deal with that. But you remember back in the day, everybody used to be scared of credit cards. But now you got 1,000, 2001 credit repair companies and how to build your personal credit so you can go get business credit. Now everybody loves credit now. So don't be scared of it, okay? Again, you're controlling 109 to 120,000. That's fine. The second thing that we're really looking at is the time of day that you can trade. So with ES futures or any futures, it is 23 hours a day. So I can come up, if I can't sleep at night, and I want to come in and trade ES, I want to trade anything at nighttime, it's always doing something. Something is happening at all times. So it's 23 hours a day, 5.5 days a week. So they start on Sunday night, Sunday evening, and then they go until Friday at 4:15 and when they shut things down. So now you only have one day, which is Saturday, and then half of Sunday that you can't trade. So you got 5.5 days that you're able to trade the futures, especially if you have a job or something's going on, something you might have to wake up early in the morning to do it. But if you're about to go to work, or you're getting up a little early in the morning to go to work, I want to get up at 6 o'clock, 7 o'clock. Oh, I can trade this. Oh, we got some news coming out at 8 o'clock. While the options traders are sitting there not able to trade anything, you're like, oh, let me get in this. Let me see what the bias is for the day. All right, I'm gonna take this up. Cool. I've locked in my profits, just like this morning. I had to go to a class, so I got in the morning. I said, okay, let me see what the futures are doing. Let me go ahead and play the direction that I see that it's going. Okay, let me take those puts. Boom, it came down to the puts. Then once the market opened, the price stayed right at where I got out before market open. Then where everybody else now with the option side is now coming in like, oh my gosh, it's choppy, it's not moving anywhere, it's not doing anything, because they already took their profits in the pre-market. Okay, and that's one thing you get an opportunity to take advantage of, is what that pre-market movement. And you might not be sitting at the computer from 8 to 4. A lot of people got jobs. It's hard for them to get into an options trade because they can't watch it. You get up in the morning at 6 o'clock, boom, you have a chance to actually trade what's going on in the morning, because at 7 o'clock, you got some movement that's happened. 9 o'clock, you got movement that's happened. And then 9:30 happens, and it just stays in a range all day, and you're trying to trade. And I remember saying it today. I told somebody, as soon as they came in the room, I was like, I don't know what the options traders are doing. They're trying to get in these plays. And as soon as that person came in, they were like, yeah, we're getting chopped up. I was like, hey, I already know, because I got out of my contract this morning at 40.33.75. And at the end of the day, all it did was get to 40.34.25. I already know that was a choppy day. So, and trying to get into those contracts and trying to trade this, it's a little hard, because a lot of people are doing out of the money. They can't afford the at the money contract that's $2,500. Can't afford it. But now with futures, you get an opportunity to come in with the $500 or $1,000 or $1,500 or $2,500. And now with that $2,500, you have a potential to get 4 contracts. But of course, I will never tell you to get 4 contracts. I will tell you to start with 1 contract first. I'm going to tell you to start with a simulation account, and then you work your way up to where you are confident with this. All right. Okay, yeah. So I talked about the news already. So that's going to be another, thing that you can actually take advantage of news. So when you hear me talking about the secret economic indicators, or you hear somebody talk about CPI, you hear somebody talk about jobs, you hear somebody talk about all these different things that nobody in the options world can actually take advantage of, unless it's FOMC, unless it's housing numbers at 10 o'clock in the morning, unless it's something that's happening during the market hours. A lot of the news happens before market opens. And then the options traders are getting the I would say, quote unquote, leftovers of what the futures people have already taken advantage of. And now we leave it to the options traders to come in and do what they're going to do. So you get a chance to take care of that in the morning and be exposed to that. I'm not telling you to go out there and trade it, because it could get very volatile. And that's the issue with that. It's just a lot of volatility during that time. And you might not want to take advantage of that, but you still have the opportunity. Number 5, set yourself free from these charts, because a lot of people sitting in front of these charts and they're constantly checking. They're at work. A lot of people, the performance at work is dropping down, and they don't even want to work no more, because they like, you get in the way of my trading. So now if I get on at 5 o'clock, 6 o'clock, okay, I can focus on that, make the money I want to make $1,000, make 500, make 200, and then move on with my life. And then taxes. I'm not a tax advisor, so this is not advice, but you have an opportunity, just like with SPX and you're trading options, that same tax code applies to where a portion of your proceeds and profits are taxed at a long-term capital gains rate. And then the other portion is taxed at a short-term capital gains rate. So you're having that advantage, and tax code is built around these types of things. You have your SPX, NDX, RUT, and DJX, and then you have your futures. So the futures are, like I said, you have a lot of futures. So there's a lot of things that can be traded. You got soybeans, wheat, all of that can be traded. And the tax code is built around that. You go and trade options, it's not really made for you to make a whole lot of money, because you make let's say you make $100, Uncle Sam wants 30% of that. So now you've actually made 70. And that's what a lot of people get in trouble at the end of the year when they get that tax bill, that they're like, oh my gosh, wait a second, what happened? What's this wash sale? What is that? Well, how does that affect me? How come I have to pay X, Y, and Z? What's a wash sale? I don't know what that is. So I do encourage everybody to please get in contact. If you are trading options and you are making money, please get in contact with a trained accountant that deals with investors. because you want to make sure that you're not getting, what's the word, messed over by the government or by, state taxes and all that other stuff. Because if you get that bill in the mail, ask me how I know. Hey, if you get a bill in the mail and you got to pay it, now you're going and working double to go pay that bill and making sure that you get everything taken care of. So, yeah. All right. So what is the value of a contract? So when I say value of a contract, I'm talking about the tick size and the tick value over here. So this is TD Ameritrade, TOS. So for instance, right now, let me just go over here to ES because I'm really focusing on ES. And a lot of people, they talk about oil. So you can start looking at oil here, which is CL. And I'm coming down here to ES. So for ES, when you look at an ES chart, you are looking at a chart that only trades in 25-cent increments. So when you look at SPX, SPX will have, I'm at 4,024 with 26 cents. They'll have that versus ES will come in here and you can only hit 25-cent increments, okay? So every time it moves, that is adding $12.50 to your account, okay? So that's for one contract. So when I say per dollar move, that $12.50 times the 4 is going to give you $50. That's why I say that per dollar move, it is equivalent to a 0.5 delta in options. We don't have to deal with any other Greek other than saying that for ES itself, you are getting $50 per $1 move on ES. So each tick is 25 cents. So 4 ticks equals $1. Boom, $50 per contract. Now, if you start getting the 10 contracts and 20 contracts and being ridiculous sometimes, because I've done the 24 contracts and it moves on you real fast. So you got to be ready. Yeah. All right. So ES is $1. So $50 per contract. In Q, where are you? In Q, which is the NASDAQ, that is $5 per $1. I'm sorry, $5 per tick. So you're getting $20 per $1 move. And then you come over to Dow Jones. Dow Jones is YM. Where are you? There you go. So now that moves in $1 increments and boom, now it's $5 per $1 move. Now, when you hear that, you're probably saying, oh, I'm gonna trade ES all day. Oh, Dow Jones don't move enough for me. But when you look up here and you see that Dow Jones moved $167 versus ES ended at $1.25, what actually made more money throughout the day? If you probably look at that and you're like, okay, I'm probably going to say Dow Jones had a bigger move. And if I got 167, let's say you got 167 points on Dow Jones. Now you're multiplying that by the 5 and you got that. That's what you ended up getting. Or you got 10 points. Okay, you got $50 for 10 points for $10 move. So, and you remember, SPX, let's say SPX is the baseline. And then we're going to say that ES, so ES is the, SPX is the baseline, ES is the equivalent for SPX in futures. So then NASDAQ trades about 3 times faster than ES. And then Dow Jones trades about 2 to 3 times faster than NASDAQ. So now that I've moved over to NASDAQ, it seems sometimes I look at ES and I'm like, man, you're moving like AT&T moves. You're moving like Starbucks moves throughout the day, or Ford. So SPX feels like Ford to me when it comes to the actual trades versus NQ, so QQQ or NASDAQ and Dow Jones, because Dow Jones is all over the place. Dow Jones, like I said, it finished up $67. Russell finished up 6. NASDAQ finished down 76. So you can see that when this is up, Dow Jones is up, NASDAQ can still be down a whole 76 points, but ES is only $1.25. So when you see those, don't really think about how much is paying you, because ES definitely, it pays you $50 per $1 move. the NASDAQ pays you $20 per $1 move for one contract, and Dow Jones pays $5 per 1 cent move. I mean, per $1 move. So it all works out because people are getting paid regardless of what you plan. They're getting paid out here on all of that. And this is a way for you to scale your options. And, just you make some money in options, come over to futures, get funded in futures, and then move on. Let's see here. What is important to learn with futures? Price action. That is the first thing I'm going to tell you. I know you got a lot of people talking about the strat. You got a lot of people talking about that. You want price action because, as you can see on these charts, there are a lot of wicks out here in these streets. There are a lot of wicks, and you want to be able to make sure that you can understand price action. This is not a game that you will have somebody holding your hand unless you are in a room that is doing this live or something like that. You are still going to have to make this decision on your own, because we can't control you putting in your orders. We can't control you getting out of your orders, and we cannot control the market conditions. Okay. So you got to make sure you have to learn how the contract that you plan on trading, how it moves. If you've been trading CVX and all of those other things, come over here and trade CL. Come over here and trade the crude oil. Trade it. You got $10 per 1 cent move. So that moves 1 cent, you get $10 on that. And you in there. You want to trade cotton, you want to trade milk? Come on, trade the milk. Trade some milk. Milk needs love too. So, just whatever you are going to trade, you need to learn how it moves. Some of these do not move a lot, but then they have these higher, when they don't move, they have these higher, like you hear a lot of people talk about these treasury bonds, but now you can come over here and take advantage of it because it gets you per that tick, you get $31.25. So just come through and start to understand exactly how the things are moving, like Japanese yen. This is all the way, you got 5 zeros in here, 6 zeros, and then a number. So when it moves that, you get $6.25 for that. But anyway, all right. So you want to learn the price action because you are the one that handles the account. This is not going to be something where you're going to be like, oh, calling out, hey, I'm taking XYZ at $25 average. I'm going in now. Do your own due diligence. It's not going to be like that because you're going to miss it and you're going to try to get in and it's going to be over. And then you're trying to take a play, and that play is now going against you because somebody else has already caught that move. So, yeah, risk management. That is the biggest and most important thing for you to learn here. There are a lot of people that go into options and they get a contract and they let that contract go to zero. This is not the place that you want to let or try to let anything to go to zero, because I don't know if you've ever seen a negative number in your account, but you can see a negative number in your account with futures. Now, with that said, the brokerage houses know who their small account people are. They have stuff in place to prevent someone that has $500 in their account now owing $109,000 if SPX ever went to zero, or if the future went to zero. If we had a war or something and you happen to be in a contract with no stop loss, no anything, then they have stuff in place to get you out of those plays. But that's not what you want to rely on. You want to rely on making sure that you have your risk management in place. And when I say risk management, when you enter a play, you have already set up a bracket to get yourself in and out of a trade without having to do anything else. Okay. Matter of fact, I'm about to bring up NinjaTrader real quick so that we can talk about that and you can see what I'm talking about. Matter of fact, let me just bring that over here real quick. So this risk management, let me bring this, make this bigger. I see the questions in the chat, but I'm gonna answer those afterwards because I don't want to break my train of thought. But I got you, don't worry. Got you, cool. So here's NinjaTrader. So when I come in here, I have everything already set up to where I either have something, I got one that's set up for NASDAQ with an auto break even. I have one that's set up a second version of that. If I want a half a point, if it's not really moving, I want to take half a point. If I want to do auto break even to where it moves a certain amount, I'm going to move my stop to the automatic break even so that if it does come back down to that area, I'm not losing money, because some of these, you know, you'll take it, it'll send that wick all the way back up, just like here. If you came in this, it went up here, came up, touched that level, and then it sent a wick down here. Now you underwater because you didn't have something in place for yourself already to take profit at a certain area. And these are Fibonacci retracements that I have on here to know exactly where I can get into the play, because I can get in here, take it down to these levels. But all it did was trade in between levels today. Boom, it pops up, comes back down. And this was all before the market opened. It popped up at 9 o'clock. Well, actually, this is early because I'm an hour ahead of y'all in Eastern. So this is 9 o'clock my time. So it'd have been, I'm sorry, this is 10 o'clock my time, 9 o'clock Eastern. And you can see at 9 o'clock, it's popping up, popping up, popping up. Y'all can't take advantage of it until here. This is on NQ. Nobody can take advantage in the options world until we get to this area. And they get in here. If you were playing NDX, yeah, you would have had this drop right here. But anyway, so the risk management, matter of fact, we'll go in here real quick. And when I'm saying do a custom real quick, you want to be able to come in here and customize what you're actually doing. I want to tell the computer how many contracts I want to get. If I want to get 2 is what I want to get. I want to tell it what is my stop loss. So sometimes I'll come in here and say I want 10 ticks on the stop loss, and I'll take 30 ticks for the profit. 10 ticks on the stop loss, 36 on the profit. Then I'll come over here and look at my the stop strategy. Then I'll come in here and say, what do I want this to do? If it goes, let's say it went 5 ticks up. So for ES, that would be 120, that'll be $65 if you had 1 contract. So if you had 2 contracts, you're sitting on $130 if you went to 5 ticks. So if it goes up $130, I want to move my stop to automatically break even. And I want to put it there. And that's it. I want to leave it there. Then I come in with this auto trail and I say, for 1 step, if I got 2 contracts, maybe I want to have a runner. Maybe I want to leave a runner on there. Okay, so I'm going to put this. Now, once this triggers, it's going to say, okay, you're now at this stop loss. Now, every single time that the price moves, I'm going to move with the price or the profit trigger. If the price moves up 2, I'm going to move the stop loss up 1 position. And this is going to happen every single time it does that. So you want to make sure that your risk management game is on point, because this will save your account. This will save every single thing on your account. We got you. So just make sure that you come in here and learn. This is Ninja Trader. I'm using Ninja Trader. A lot of people, you know, they're talking about the Trade Evade and they're using it on Trading View and all that. Again, it's your decision, but you don't have this on Trading View. You have to go in manually and do it each time. I don't have time for that. I'm trying to get into this play, let it run, do what it's going to do. And if it's going against me, I'm trying to get out. I don't have time to sit and say, hey, okay, I got to put this price in. I got to put this price in. Okay, now that bracket looks good. Okay, cool. And by that time, I'd have missed half the candle trying to get into that play. So I just got to make sure that, you know, you pick a platform that works for you. And I encourage you to learn Ninja Trader. I encourage it, encourage it, encourage it. Whew. All right. Let's see here. Commissions. All right. So now you're not going to find, this is not like options where everybody's trying to get everybody to come in and take the money and then make the options trades free and all this other stuff. This is not what you're about to get. Not at all. They don't do free because they know that if the tax code is set up for something, they know a certain person is trying to play futures. If the tax code is set up to take more money from you, they know a certain person is trying to play options. We scare everybody with, oh my gosh, don't play futures, don't do it, because you can do X, Y, and Z, and it's this detrimental and blah, blah, blah. But your counterparts are out here playing futures all day long. If the tax code, just put that in your head. If the tax code is set up for it, you probably want to start looking into it. If the tax code is set up to take more money from it, that's something probably that you want to like start to work your way away from. Make some money in it and get away from that and put in futures and do what you're doing. Okay. So again, not a tax advisor. So let me just let you do with that what you wish. The commissions matter. So some people come in options and they just get in there and they're just trying to scalp and scalp and scalp and scalp and scalp. They've traded 1,000 contracts in a day. And then you get over here to futures and you're trying to do that same thing. And you're like, man, these commissions adding up. What's going on? I got to slow down on this. You got to start planning your trades and making your trades a little bit better, making some better decisions, and that the entries and exits matter. Okay, so you want to make sure that you're getting in. Everybody tells you to buy low and sell high. That's what you want to do. You want to buy that thing low, sell high, or if you're selling at the top, you want to sell high and buy it back low. And now here with the futures, I have an opportunity to come in here and say, I want to buy the ask, I want to buy the bid, I want to sell the ask and sell the bid. So it's a little bit different for options. If I was buying, so if you were doing options and you were coming in here, you would be selling a put at whatever the put is, hoping that you get down to that target. I'm selling a put by doing sell ask or sell bid, and it'll tell me the ask price and bid price. And when I sell ask or sell bid, it'll put it in there and wait for the price to come touch that. And then once the price touches that, then it's getting into that order. I don't want to be chasing out here clicking on buy market, sell market, unless something is actually going on that I really, really want to get into that. And I cannot really think of too many scenarios that I really, really, really need to get into that contract. If this is happening right there, I need to, okay, I'm looking at my Fibonacci retracement that's up here to see that it hit that. And for those that have taken the Fibonacci course, they know what levels these are, and they can see, oh, that's a definite level I want to look at to let it drop from. And when we see it dropping from that level, we're like, oh, that drop about to be nice. It's going to be nice because boom, it dropped through 1, 2, 3, 4 levels, boom, down and back up. So you want to pay attention to your price action. You want to pay attention to your risk management, and you want to pay attention to those commissions. All right. News schedules. What you don't want to do is come in here and get caught in a contract and then you didn't know news was happening at a certain time. It's just like options. You didn't know news was happening, and all of a sudden you in a short at 11,840, and then some news happens. It shoots up to almost 11,900. That's $60 that thing that shoots up on one candle, and you get stuck because you didn't know news was happening. And the quickest way for you to blow your account is to come in here. Okay, I'm gonna get into this play. Let me put on a sales stop up here, and then I'm gonna put on a target down here after I get into the play. This happens, you get margin called. Now you owe $1,000. You came in here with 5. You didn't have a stop loss. Now you owe $1,000 because they're gonna get you out of that play. They're gonna take you out because this move up $60. You need to be up out of there. You got to have your stop loss in there. You got to have all your stuff in there. That risk management, like I said, is imperative. But they're gonna try to get you out of there, but that's still on you. So make sure you pay attention to the news schedule. So Secrets of Economic Indicators, Secret of Economic Indicators. I'm gonna say it one more time. Secrets of Economic Indicators is the book that you need to read to understand what these economic indicators mean. And most people, when they hear, oh, car sales this year over last year was X, Y, and Z, it means absolutely zero to you. You're like, why I care about that? House sales year over year from 2022 to 2021 was X. And you just sitting there chatting, oh, look what happened on WorldStar, blah, blah, blah. You're not paying attention to it. And then boom, the prices moved up, prices moved down. You missed the whole move because you didn't know what it meant. A lot of people hear CPI and you see CPI and you're like, oh, okay, well, CPI, okay, it was this and that wasn't really that bad. But then you come in here on a CPI day and you'll see how that price just jumps up, jumps down, got this big, huge wick. You tried to take advantage of it. You got in it. You got out. You moved on with your life. FOMC. We got all these different strategies and all this other stuff for FOMC. Make your money before the FOMC. Make your money, especially with futures. Do not come in here trying to come with some random strategy that you think is going to work because it worked on options. Do not come in here trying gimmicks to get extra money, because that is going to end up with a loss. Options protects you a little bit and keeps you to a defined loss depending on what you're doing. And again, a lot of people are not using options to their fullest potential, because you have 17 different strategies that you can have with options other than just buying a call and buying a put. 17 more. So we'll move on from that. All right. Bracket orders, like I just said, with the bracket orders, it's telling you what your entry is, it's telling you what your exit is, and it's telling you what your stop loss is. So if you were getting into something, let me just bring up I'll just connect to the demo account that they have. Connections, and then let's say simulated data feed. And let's see if that connects. Or it might just be playback. Cool. So this one has, so where you can come in and say, I want to practice how to get in and out of a contract. So like with NASDAQ, if I come in here with the NASDAQ one, is it going? Yes. So now everything's going to be going for you. I can come in here and see what buy and bid does. Oops. There you go, Sim. I can come in here and do NASDAQ. I can do a buy bid. So it ordered field. Now this is a bracket. So the bracket is already set up for me. So I can say, okay, I want to target the top of this H, or I want to target the bottom of the H for my stop loss, or I want to get 2 points, or I want to get 5 ticks. I can bring it in there and all this other stuff. What I'm gonna do right now, I'm gonna just, because this is just a simulation and they allow you to change the trend. So this is like a choppy trend. They allow you to set it to where you got a choppy trend, you got a very strong uptrend, so you can see what's gonna happen with that and how would I get into these plays when it's a strong uptrend, or I can change it to a lower one, but they have a different connection that it'll give you like more realistic playback data from the day after the day is over. They'll give you the data so that you can then understand what that actual thing is doing. So you want to get used to the movement. Like we see this H pattern and we expecting another H pattern and we're like, okay, it's going up. But what happens when that trend starts to go the opposite direction? And now I can move my profit target. I can move it wherever I want to move it. I can set this here. I can do all the things here. I can move it up and down. If I want to move that stop, if I want to move that stop right here now, I want to break even, I can do that. Or if I'm just saying, I just want to take this profit real quick, I'm gonna come on down until it gets to like the ask or bid. I'll just put it right there. Targets filled. I made my $80, moving on. And that's another thing. With options, you are stuck with whenever you use, like let's say you're using a cash account and you got, or a margin account with under 25,000. You are not able to take advantage of any more plays after you've taken your play. Now with the futures, you're coming over here and it's instantly available. Your money is instantly available for you to actually go and get into another play. You don't have to wait that T+1. You don't have to wait any time to get your money available. It is there available for you. And then you can come in and get in whatever you want to get into. So I'm just going to show this auto break even real quick and what it normally does. So if I get into a contract here, I don't know why it's putting me all the way up there. Cool. Oh, I think I know why. Okay, so when it hits 5, I think it's 10 on this one. Let me see. We'll see in a second. But these auto break evens, they just let you, let's see what it does. 10, I think it's a 10. It'll get there eventually. This is not showing the price right now because that simulated price is not showing it. See, it automatically brings me there. So now if once it keeps moving up and as that price moves up, that it automatically moves. I don't have to do anything until it gets up to the stop loss. You're not going to see that right now, but, and if I just say, oh, I want to change the trend in a different direction, move it back down, then the price will start taking away from it a little bit to start taking, boom, stop is filled. You've made your money and you're not really worried about it no more. So that small little pullback, it takes like 1 or 2 ticks back and then you're good. So, yeah. All right. So again, like I said, this is nothing to be scared of. Futures, this is a very brief overview. You really got to dig some into this and get your price action and risk management game up because, like I said, you can lose more than you put in, but they have protections in place for you not to have to owe $120,000 at the end of the day. All right. So you want to make sure that you have your stops and all this other stuff. And remember, even with stops, if you're trying to trade something volatile or volatile, you can get your stop skipped over. And it's the same thing with options. So you'll come into an options play and you're like, man, our stop didn't work. It didn't happen. because your price skipped it. Or if you came in here for FOMC and you like, oh, I'm gonna get an FOMC, I'm doing it, and the price skips over that, boom, you like, oh, $5,000 now. You're like, ooh, how did that didn't work out too well, because I tried to play it in one direction and go the opposite when it went the opposite way. Didn't work out too well because they're whiplashing that up and down. So you want to be cognizant of that and make sure that you are being very risk averse. Okay. The options mindset coming to futures, it can get you messed up. But you want to make sure that you learn your risk management and come in here and practice. It's all about practice. Okay. Because everybody's already been looking at SPX. Everybody's been telling you to look at ES to trade SPY. Okay. So they've been telling you to do that. You might as well do it. You might as well come trade the stuff they're telling you to look at. Oh, I'm trying to turn my computer up. There you go. So you might as well come and trade the stuff that you're using. If somebody tells you to I'm gonna chart ES to play SPY, why don't you just come play ES? I'm charting NQ to play QQQ. Just come and play QQQ. I mean, come and play NQ on the futures. And then you do have the MES and the minis, which is a little bit easier way for you to, get involved in the futures, but you're using the same charts. So you just want to make sure that whatever you're doing, you just get comfortable with it. Okay, just get comfortable with your trade. And again, don't be scared of this, because it's here for you to make money. If you come in the right way with the right attitude and learning the futures and learning how everything moves, how your contract that you're trading moves, you have a good chance. And when you are patient, this is all about patience. I'm sure, it's all about patience. I'm sure Shay will be like, oh yeah, that patience is that's what I need. I need to work on that patience. I got my patience down, because when you get your patience down, you letting that trade come to you. And then when you let it come to you, boom, you got a better price than everybody else. Then now it's gone in the direction that you're expecting it to go. You're making your money and you calm. You out here calm, just as calm as you can be. Oh, look at that. Move it. Moved in the direction I moved. Now, when you start getting in these 10, 15, 20 contracts, heart gonna be beating. Okay, I'm gonna tell you that right now. I put 20 contracts on, 24 contracts, heart is beating out here. Because with 24 contracts, matter of fact, I'll just put it on right now. Let's say we put this on at 24 contracts, and then we let this go. I'm gonna just move it up so you can see how fast this profit target moves. I'm gonna do 48. I'm gonna do 24. So order is filled. So now I'm gonna move this. I'm gonna move this over here with the profit target. With the profit. So that's one. All right. So I'm gonna move this up. No, that's not even 24 contracts. Let me move that. 19. Cool. I bid. All right. So you got 24 contracts. I'm gonna move this up so you can just see how quickly this stuff moves when you got 20 contracts, and which is not what you want to do. Now, 24, boom, just one tick up got me to 145. One more tick up is going to add another. Let's see what you got. Boom, 265. Now you in that. Now that's not even a whole. We've moved up four. How many ticks we move up? 5 ticks, and you're already at 625. 6 ticks, you're at 745. So this is where, that leverage comes into play. I'm never going to tell you to go in here and throw 24 contracts at it, but if, sometimes you got to do what you got to do, because boom, just that fast is at $1,000. Okay. So now this is not going to happen every single day. You're not going to come in here and you can, it's very possible, because some people make $10,000, $15,000, $20,000 on this every single day because of stuff like this. They come in with the right contracts. They're doing what they need to do. They're focusing on what is the direction that we are moving in. Let me play in that direction, give it enough room to play around. And then once it starts to go in the direction I need to go in, let me go heavy on these contracts. So you just got to make sure that you are, just paying attention to that. So, and like I said, this could move very fast for you. And then it could also go in the opposite direction on you. I move that down, it can go in the opposite direction. But that stop was there, so I ain't got to worry about it. But yeah. Yep. All right. I think that was it on my agenda. Now I see questions in the chat. I'm gonna open it up real quick. Let me answer these questions in the chat real quick. Shout out to the vegans. That's what's up. Let's see. No, I'm not putting this on YouTube. NQ moves too fast for me. I mean, you just got to get used to it. Once you get used to it and you put that on the 15-minute chart or whatever it is, it'll definitely be able to use that. So Stan, let's see here. Oh, can you trade on Tradeovate as a business? I believe you can. I think Brown might have to answer that one, but I believe you can. Can you trade under business? Yes, you can. Oh yeah, can you trade under business? Yes, you can trade under business. Even the funded account that I'm doing, I sent the agreement back to them because they didn't put my business name and EIN on there. So I gave that to them and they're going to send that agreement back to me so that I'm trading under my business name and not in my personal name. Let's see here. Is there a way to trade futures and not lose more money than you put in? So of course, your risk management is the way that you protect yourself from losing more money than you put in. Okay, so you want to make sure that you are able to come in here, set your brackets, get into the plays. You know what time the news is at. You're not trying to trade during the news, or if you are trading the news, you are willing to risk this money that you don't have to get in there and try to make something. So, you know, a lot of stuff happens during the day. You can catch 10, 15 points throughout the day, or especially on NASDAQ, and then you're able to, you know, make whatever you want to make. Start off with a goal. I want to do 2 points a day. 2 points a day with one contract, you got $100. Okay. So a lot of people are struggling to get $100 a day in options. Now I have an opportunity to come over here and let ES move a whole $2. Let ES move $2. I've made my $100. Cool. Then you start scaling your contracts. Okay, now I want to make $200. Now I got 2 contracts. Boom. ES has moved $2. I got $200. Cool. So you just want to get in there and start working with it. What's the minimum amount account has to have to trade futures? TOS is a beast on their requirements. Okay, so at one point when I first started, TOS was like 24,000 to trade one contract. That's when I started. I'll use Stage 5. So Stage 5 is another brokerage that you can use. And they use the COME and CBOT and all that data. And they have a wonderful platform also. So NinjaTrader has a $500 minimum that you have on to trade ES. For micros, which is the MES, I think it's $100, I believe. Something like that. Is anybody in here that trades micros? No. Okay. So they might put it in there. Yeah. Anyway, I think it's $100 for micros or $50 or something like that for micros because it's a 1/10. You would make 1/10 of what you make with ES. Yeah. Let's see here. I've been looking for the strat indicator for NinjaTrader. I got you. We'll get it to you. Send me a message in the Discord and I got you. Are you buying the ask and selling the bid? So it depends on what's happening. If that price is moving, I'm buying ask because I want to get in front of it. I want to get into that trade. If I'm planning my trade, I'm coming in here and I'm right-clicking. I'm coming in and I'm right-clicking and saying, hey, I want to buy limit. If I say I want to get in down here, it's going to wait till that price comes down to come in here. And then I can move it where the price is. I can move it up and down to see where the price is. And then I can just leave it there and let the price come down to it and then go in a direction. But the buying ask, if I want to wait for the price to come back down 1 or 2 ticks, I'll buy the bid. If I want to get ahead of it and the price is moving up kind of quick for me, I'm going to buy the ask. If the price is moving down and I want to get ahead of it, I'm selling the bid. Okay, so that bid is what somebody's willing to buy it for. I'm going to sell that. I'm going to get in that. If I want to sell the ask, I'm still getting ahead of it to get into that play as quickly as possible. So you just got to come in here and play with them. Rev always seems like a wonderful idea until you click that button and realize that all you did was sell market on the contract and then buy market on the contract. You're leaving yourself open to it. But if you are going in the wrong direction, and you just have to know when you're wrong. When you are wrong, you are wrong. It's okay to be wrong. Just don't stay wrong. If that thing moves 2 points against you, and then it's at 5 points, and it's at 10 points, you should have been out that contract a long time ago. Get out of the play and reestablish yourself and get yourself into another position because you don't want to stay wrong forever. Just like people, sometimes with options, I'm not, throwing shade to anybody, But sometimes with options, you'll get in there and you'll just hold it. And it's down 10%, and it's down 20%, and it's down 30%, and it's down 70%, then it's down 80%. Now you at negative 99.99%. And it's 3 p.m. and you like, it's gonna come back. It's gonna come back. That ain't what it ain't gonna happen. It could happen, but now you need a 900% move on an option contract. You need a 900% move for it to come back to break even. So that's real. That is 100% real. When you just close the position, is that the same as a market close? I don't know what you meant because I don't remember that close. But if I was in this, I clicked on buy bid. Go ahead.
So I've been paper trading with Tradeovate or whatever. So like to close, like you can set the take profit limit, but you can also like just close position. Is that the same as like
that's a market? That's a market. That X that's next to it where it says close position, that's a market order.
Okay.
And I click on market and I don't know what they're gonna give me. So if what we're gonna sell, so if I sell market, right now it's down to 175, 1951. It took off $40 more because it's gonna give me wherever that price is, and I'm at the mercy of the market for that. So
okay, so it's better to just move it and adjust to take profit.
Right. To move you're moving your stop up, because even then it's still going to be you're just trying to get out. If you're trying to get out, you're trying to get out. If you're in profit, move your stop up and let it come down to whatever the stop is, or move it up to move your profit target down. If you don't think it's going to go to the profit target, move the profit target down. Somebody said Ninja Trader, haha, buy. Okay, cool. I just know that this is one of the easier things for people to learn. It's a lot of things out here. You got TD Ameritrade. You can learn TD Ameritrade. You can do the same thing on TD Ameritrade. You can do Active Trader in TD Ameritrade. A lot of people can't afford to get into TD Ameritrade, so I have to get on things that people can afford to get into so I can show them how to do things. A lot of people are getting into the Tradeovate. I went and got an account to get on Tradeovate to help figure out what was going wrong with some accounts that people had. So, I'm getting on the stuff that people are using. So that's fine. If you don't like Ninja Trader, that's fine. Patience. Yes, Shay, agreed. Yes, patience pays. Patience. Let's see here. Yes, you can trade as a business. It's $50 for micros. So that's the actual requirement is $50 for micros. That's what's up. Or 150. Okay, cool. The difference between bid, ask, and market. All right. So if we bring our attention here to the bottom left-hand corner, or bottom right-hand corner, I do apologize, you will see ask and bid. So right now, let me put this in the middle so it stops moving like it's normally doing. Cool. So right now, if I click buy bid, I'm going to try to get in this price at $11,747, $11,748. If I click buy bid, that's where I'm going to join that. So if the price comes down and touches it, I'm in there. If I click ask, that is what somebody is selling it at. That is what whoever has the contract, that's what they're willing to sell the contract at that time. So I'm selling it at, I'm willing to sell this right now at $11,447.50. And you can see that there's a 25-cent spread in between this. So there's a 25-cent little gap that I'm not going to sell this below. I'm not going to buy this above. So that's what the ask. And in the market is whatever this price is, when you click that button and however long it takes for that information to get from your computer to the brokerage's computer to the market maker's computer, then you are at a mercy of whoever receives that order and fills it. If they decide, and this is how I explain it to people, let's say you got into something that was $1 and you clicked on buy market. Now, the person on the other end of the computer, they could be like, the computer systems, they're going to fill you at whatever the best price is. But somebody can step in, these market makers can step in and say, oh, let me clear all those other orders out here. I'm going to give you that. I'm going to give you for that for $3. You came in and bought, you saw the price was at $1. You came in, clicked on buy market, it shoots up to $3 all of a sudden. You're like, what in the world just happened? So I just paid $3 for a contract that's $1. And then when you look at your profit loss, you are down $2 already. And the price is back at $1. And you're like, what happened? And you call the broker and you're like, what's going on? Something happened. There's an error. And then the broker is just like, okay, hold on. Let me go look at something real quick. Let's go find, and boom, they come back with receipts. They ask me how I know. You come back with receipts, and then they tell you, you clicked on market order. This is where you got filled. You were the only person that got filled at that order, and that's your loss. That's what you did. You did it. That's on you. There's nothing we can do about it. You clicked on market order, you out of there. That's what you get. So watch out for those market orders. And you got to remember also, some of these stop losses, they turn into market orders. So you're not completely getting away from them, but you're getting yourself set up to where you know where you're trying to get out. Boom. I'm trying to get out right then. I'm out of there. Boom. I'm putting that limit order right there. We're out of there. Let's see here. Can you explain the tick moves again in relation to $1 for profit? So ES. So ES or NQ. So for ES, let's say which is S&P 500 futures, you have $12.50 per tick. Okay, so a tick is 25 cents. So like you can see here on NASDAQ, it moves up from 75 cents to $1 when you open them up. Oh, this is NASDAQ. Hold on. Bring over ES real quick. All right, so you got the 25 cent, they're in there. There's 25 cent increments in there. Gotta open them up further, maybe they'll do it. There we go. So it's 25 cent increments. So from $4.4026 up to $40.27 is 4 ticks. Okay, so it's 1, 2, 3, 4. And it's $12.50 per tick. So at $12.50 per tick, if I can move 4 ticks, I now have $50 for one contract. If I have 2 contracts, I'll move up $1. That gives me $100. So for every $1 move, you can just say it equivalent to yourself. For every $1 move, I'm getting $50 per contract. Okay. That was for Jeff. And then NinjaTrader, you just go to ninjatrader.com and set up their account there. And this is one of the basic ones. You know, it gives you what you need. You have a lot more. Like I said, you have a lot more brokerage houses that have more advanced stuff. But I'm not going to send you to get the most advanced thing until you master the basics on the first one. Okay. So, yeah, anyway, the things you were showing with NinjaTrader, can you do that with ActiveTrader? Yes, ActiveTrader has that exact same brackets. You go in and set up your brackets. If you have not watched that, go to that YouTube and watch the setup video that I have for ActiveTrader, and you can go in there and set up your brackets. You want to take it to what now you can change it. Instead of it being a percentage, you can change it to ticks. So we have percentage, you have ticks, and you have something else. I forgot percentage, ticks, and I think it was just dollar amount, I believe. I forget. Yeah, I'm used to using this right now. But you can go in there and do the exact same thing. You just have a higher requirement money-wise to get into a contract with ES for TD Ameritrade. I'm confused on how much contracts are. Okay, so Mark D. Like in options, if you see $1, you know it's $100 per contract. Where are the prices for contracts and futures? Okay, so with the futures, I'm just going to use ES again. So they require you to have $500 in your account to purchase one contract. That does not mean that the contract is $500. You are controlling $109,000 to $120,000 with that contract. Just like you're doing 100 contracts, you're controlling 100 shares. When you get an options contract, you're controlling that 109,000 when you're purchasing the futures contract. So how it works is if I have $500 in the account, I can purchase one contract. If I have $1,000 in the account, I can purchase 2 contracts. If I have $2,000 in the account, I can now purchase 4 total contracts. The amount of contracts that you are able to purchase is based on the amount that you have in the account. If you go below $2,000, now if I'm at $1,900, I can still only purchase 3 contracts because I'm not at that $2,000, because you need $500 in your account to purchase that contract. Make sure that makes sense. Woo, Abe Hernandez coming with the controversial questions out here in these streets. How effective is the strat on futures? All right, so I still believe the strat is still effective. Okay, it's still all about price action. Okay, price action is still going to rule. The issue that you run into are these wicks. Okay, these wicks are the issue that you run into sometimes, because you can see it triggers and it falls right back into that trigger. So you're getting stopped out. It's okay to get stopped out. It's okay to get stopped out. You just have to make sure that when it triggers, your stops and everything are set in the correct place, because boom, it comes in, it triggers, it goes 2 up, but then it's a failed 2 up. This next one comes in, that goes 2 up, it comes right back down. This one goes 2 down, but it comes right back in. This one goes 2 up, but it comes right back into it comes right back into the trigger. 2 up, back into the trigger. 2 down, back into the trigger. 2 up, 2 down, back into the trigger. So you gotta be aware of that and see where you start catching these moves here versus trying to get in and trade right here. So, and this is on the 15-minute chart. So you can go to whatever chart that you want to go to, trade on whatever time frame you want to trade on, higher time frames, wait for the breaks on those higher time frames, do whatever you want to do. Yeah, it's a lot of wicks on futures because they're looking for people that are putting those stops in certain areas. Okay, futures is a stop hunt game. That's what it is, a stop hunt game. So they're looking for stops, people that are like having these little tight, okay, they come in here with that real tight, up stop field. It's okay because you're protecting yourself, but then it goes in a direction that you want to go, get into that play and see what you can do with it. So $12.50 per 25 cents. That's correct, Will. Yeah, paper trading was confused on why there's so many wicks. Yeah, it's all about the stop hunts. This is on ES, and it's a lot of wicks because it moves back and forth. Yeah. So, what questions do y'all have, real quick? I know I said a lot. Best times. Woo! So you have the Asian session, you have the London session, and then you have the New York session. Right. So either you're going to be up at 3 o'clock or you're going to be waiting until 7 p.m. So the Asian session is very condensed. Okay. It's a very condensed session to where the price is not moving crazy like it does in the London session. London session is where it's a lot of movement that happens. And you want to make sure that you are trying to trade. Whatever you're trying to trade, you want to be in the times that these sessions are moving. So the Asian session, it has a very, very tight range sometimes. And it can move. It can definitely move. What else is there? The London session, which is at 7 a.m. to 12, I believe, because the London session closes at 12. That's where that lunchtime comes in, because the lunchtime is London session closing at 12 o'clock. So now you're losing half the world being involved in the market. So then at 12 o'clock, 1 o'clock, 2 o'clock, now everybody comes back at 1 o'clock, it does its moves. And then now, everybody's struggling to get something out of that second part of the market because you lost the other side of the world that was involved in the market. And a lot of people don't, really understand that. And then you have the New York Times. So anytime before, you're trying to trade that before 11:59, because again, at 12 o'clock, now you're at a new day, pretty much. Let's see here. I was talking to somebody in Discord about futures a while back. They mentioned you don't have to deal with the stress of heartbeat of the Greeks. Right. So you're not dealing with Greeks. There are no Greeks. I don't care about theta. If I wanted to get in the morning, and let's say I got in the morning and I came in here and I called a contract up here at 40.43, and I said, I'm taking that down at this broad information. Matter of fact, Stan also, or Abe, these broad informations are gold with futures because they're respecting them. So everything that we tell you about these broad informations, everything we tell you about these breaks, everything we tell you about any of the stuff that has to do with the strat, still follow it, especially these broad informations. Because these broad informations, they are gold when it comes to different levels. And you can see that it's a daily broad information right there. And it's just respecting that. It's respecting it at 4 o'clock in the morning, 7 o'clock in the morning, 9 o'clock in the morning, 10, midnight. It's being respected. So the strat is still there. What was I talking about? Oh, yeah. So the Greeks. So I'm not worried about theta. I can stay in this contract all day long. The only thing that they care about with futures, you entered at 40.43. Okay, got it. You entered at 40.43. what price are you in now? You at 40.33, so you got a 10-point move, you got a $10 move in there, so 10 points, and you got one contract. Okay, cool. This is the money I'm giving you. There you go. Out of there. And it's $500. I'd have moved $10, there go your $500 with the contract. If that took until the end of the day, there it is. It took to the end of the day. You still got your $500. Now, how you are going to manage these wicks, that's the part that you have to, in your head, get a little bit more, you know, I'm not going to say nerves of steel, but you need to be analyzing these contracts like, hey, well, I'm not contracts, but you need to be making sure, hey, it's not really going against me. Because like here, I got a 2 down, inside bar, 2 up that fails, and then it drops. But this was at 6 o'clock in the morning. Inside bar, 2 up that failed, and then boom, 2 down. So I got 2-2 reversal, or 1-2-2 reversal there. And then it goes 2 down again to and then that fails into, after it tapped the broad information down there, it taps a monthly broad information down there and then pulls back up. And then the H crest that was from a while ago. So the strat is still there. You just got to make sure that you are taking care of what you see and actually, you know, just follow what you see. And like I said, with these Greeks, I can stay in it all day. I'm not worried about that. I'm not worried about Vega. I'm not worried about Delta. I'm not worried about anything. I was using the Delta as a way to give you an example and tie it to options, but there are no Greeks. There are no Greeks whatsoever. All right. I'm going to put about 7 minutes for questions, or 10 minutes if we got some. Got you. Y'all can come off mute and talk now.
I have a question. Hey, everyone.
Oh, hey.
So what did you go over? What are the best times to trade?
So we were, we were just talking about the London session, the Asian session, and the New York session before 12 o'clock. So,
well, what about like stop loss? How tight should your stop loss be?
Now we're gonna talk about this a little later, but so for me right now with NASDAQ, I think mine is at 30 for the stop loss and 60 for the take profit. But as soon as I get into that play, I'm moving it, depending on how is it going against me quick, or is it going against me? Is it moving in the right direction? So, and like I was saying, that auto break even, as soon as it goes 5 ticks above where I entered, I'm moving that to auto break even. I don't even care, unless I'm entering at night and going to sleep. Dangerous, yes. But once you start to understand the direction that you probably know it's going to go, then you will be a little bit more confident in that. Because we've been talking, because me and Highway J been up at night at 2 o'clock in the morning, 3 o'clock in the morning, marking these charts up to see what's about to happen. And then boom, we wake up in the morning and the chart has gone in the direction that we are looking at. So yeah, the stop loss during the day, while we're sitting there watching it, yeah, I'm moving that thing. And that's why I got that auto break even, because I don't want to play with them, because these wicks, they ain't no joke. You in profit, and next thing you know, you come back, you got a 30 tick stop loss, and you sitting here trying to figure out how am I going to get back from this? So
yeah, them wicks will tell you out.
Yeah. So yeah. And in the times, like I said, that anytime before, I'm trying to do that before 12 o'clock. Because then, like I said, you're losing half the world being involved in the market at 12 o'clock. Because then the Europe session closes at 12.
Okay. Thank you.
Of course, that's 7 o'clock in the morning, 6 o'clock, 7 o'clock in the morning. You got some moves that's happening that time, especially between 7 and 9. Well, the options market can't do anything with it, but you got the futures between 7 and 9. There's some potential for you to get into things.
Hey, so the S&P 500 is ES and MES. NASDAQ is NQ, and what's the mini?
MNQ.
MNQ. And what about the Dow Jones?
Ooh, let's see. What is Dow Jones? So I have never.
Is it YM?
YM, yeah. YM, mini.
No. Is that the But is that is it MYM? I don't know. Let me check that in there real quick.
I think I saw YM.
There you go. It's the micros MYM.
So YM and MYM?
Yep.
All right, cool. Thank you.
YM is the larger contracts, and then the MYM is the micros.
Okay.
So anytime you see mini, that's the normal futures. And even
Okay.
when you do them, it's the same exact chart. You're just getting used to the movement, and it's a little bit less risk on you.
Okay. Thank you, man.
Yeah. Shay, you were up from 245 to 7? Sheesh. Whew.
So I had entered that, right? It was one night I was up real late and I was charting. And I saw a potential play, so I went ahead and set my brackets, and like I just went to sleep and I woke up
Yep.
and I caught like $1,000 play. I was like, oh my Lord.
Yep. And that's what
So-
Warren Buffett says. You got to figure out a way to make money while you sleep, or you're gonna be working till you die. So
And I refuse. I refuse.
I'm telling you. What platform do you guys like trading futures in more? If it's up to me, stage 5, for me, stage 5. But not a lot of people have access to stage 5. Okay. So NinjaTrader is what I'm telling people right now, because a lot of people will tell you go over to TradeAvate. It's a million brokerages, out there that you can go to. TD Ameritrade has its own. But when I learned, it was use TOS charts, use stage 5, because the commissions were better during that time when I learned. And it's what I learned was stage 5. So I'm very used to stage 5 platform. And if you're interested in it, go check out stage 5. They have a little bit higher requirement than NinjaTrader, but stage 5 has, I think it's about 2,500 now for one contract for ES. So, because again, these companies are they're calculating their risk, because if you coming in with 2,500, you got a little wiggle room for them. Got a little wiggle room to make some wrong plays. But they're not, if you come in, if the margin is 2,500, if you go to 24.99, you are out of that contract and you can't trade again until you bring that back above 2,500. So they're setting a level for the people that they want to come in and trade that. So, yeah. And yeah, you got TradeAvate, you got TradeStation, but again, these are brokerages that are just not even brokerages. They've set up trading view charts, sending your orders just like Robinhood. Robinhood has its back end. People call it a brokerages, but they're a middleman. They're a let me gamify this for you. Let me put you in the middle. I'm in the middle. Let me make some money off of what you're doing. And they're gonna pay me on this side. They're gonna pay me for your orders. Then they're gonna pay me to fill your orders. And they're gonna pay me again to send the order back to you. So it's just a middleman, and they're making money off your trades because you're a retail trader. You want to get to these well-known brokerages and get in there. Everybody is a middleman. You just want to get in the one that's going to get you a better. They're not that, because a lot of these places are not using gimmicks to get you in there. Okay, they're not using gimmicks to get you into these trades. They're not using gimmicks to get you to the platform. I'm gonna give you, let me give you 45 stocks. I'm gonna give you 45 stocks that nobody will ever want to get you to come on over here. Now you own 45 stocks at 60 cents each. So they're not playing those games. Like TD Ameritrade is not even, they don't care about what you come with. They don't care about trying to get you over there. Just get here and use this stuff. So yeah. Yeah, TOS is TOS is, you got to have a higher to play with TOS. It's a higher account number to play with TOS. And if you use TOS, you might as well be over there. But again, like I said, when I learned, it was stage 5. So because of the commissions and the higher amount that they wanted you to get into. And you got on demand over here. So on demand, you can get in and play back the days that you've had with the futures, and then you can just get in there and play whatever future you want to play with and go back in there and play and practice. All right, we got 2 more minutes for questions. Come on out that mute, talk to me, whatever you got.
Hey, what's going on?
What's going on?
chilling. So I wanted to ask real quick, what is the best way about going about learning how to do futures? Is it going to the platform, doing a practice account? Is there like a YouTube video, things of that nature, just to make sure that you're fully prepared before you jump in?
So I'm biased. So the first thing I'm gonna tell you is learn these Fibonacci retracements. That's the first thing I'm gonna tell you, because everything you see that people are doing now and they're coming and teaching you, when you look at the back end of it, somebody's gonna tell you, oh, I drew a fib here. Oh, I drew a fib here. So come learn these Fibonacci retracements, especially the ones that I'm teaching. Of course, I'm biased. But you learn the Fibonacci retracements, because then now you're looking at targets. You're looking at where this is going to potentially go. You know, you come in here, learn how we're drawing the fibs, because we use these fibs every single day. Every single day we're using these fibs. We got a strategy for a gap. We got a strategy for regular times during the day. We got a strategy for this. Hey, I'm looking at longer time frames. Look at these longer time frames. I got an H pattern. We got the H pattern strategy. We come in here and drawing these fibs, but learn these fibs, and then come in and just learn them. Because then if you got a question, just come in, join the community. Boom, we got the questions. Let's go. Ask the questions. But Fibonacci retracements, and everybody I told every single person, the people that have taken my Fibonacci retracement course, I was secretly telling you and training you to play futures, especially if you were using them on SPX, especially if you were coming over here and trade ES or charting ES to come over there. And then you got the strat with the strat concepts, and then you got fibs. Then you start seeing all of these other things that everybody else is doing, and it's a combination of those. So the Fibonacci cheat code, the Fibonacci retracements, and the strat, learn those, and then use those Fibonacci retracements every single time that you are looking at a play. You see a certain thing come on the screen, draw that fib. Learn where to draw that fib. You put that fib on, it'll pop up to that certain number that you hear me talk about all the time. Boom, it tapped that level. Hey, we in there. We in there. And then it drops, and then it drops to its profit target. So now you got an entry. Now you got a high probability entry. Then you got a profit target on where you potentially know where it's going to go. And then if you're trading with me, you got Bookmap, because we use a Bookmap all day. And I showed them today Bookmap, who was just like, look, here come the prices coming to this level. It's coming right there. We're not trying to guess where these different levels are. I don't have time for that. I want to see where the actual levels are, especially with Bookmap. See where the actual levels are. Tell me where they're going so that I can get in it. Now I have a fib. I see my fibs line up to where they're putting these orders. We in there, and we taking that trade. As a matter of fact, we got into a trade early. It was an H pattern, boom. I saw a level on Bookmap, had the fib there. It was bouncing off that whatever level was there, and then went straight to that profit target. And I put my level at the profit target. And the trade that I posted in the chat earlier today, this morning before market open, that blue line that was there was my Fibonacci retracement, and that was my target. As soon as it got there, boom, got out to play. I put my limit order 2 ticks before that level on the Fibonacci retracement. It went through, it got there, hesitated, dropped below, came right back up. So, yeah.
Okay, so if I look at the Fibonacci retracement video, I get the underlying concept of how to look at the charts, and I could apply that to futures.
Yes, sir. Because that's what I learned my Fibonacci retracements on futures in 2013. And I've been using those same Fibonacci retracements since then. And that's what I'm teaching.
Okay. Yeah, I'm gonna definitely look at the video and see what's up.
Gotcha. Just click on my, yeah, we went over Bookmap today, Jay. Just click on my name in the Discord, and then you'll see it in the link tree.
Okay.
Yeah.
Appreciate it.
Yep, Jay, we went over Bookmap today. We were going through it. I mean, we were just sitting, that's where we were using the trade. And I got into that trade, and I know Playmaker was on there, and he got into it, and I heard Playmaker in the background. I heard an order submitted, order field. I was like, oh, let me look at this chart. You over here being sneaky, huh? Let me see what we got. Got on there. I saw that drop, and then boom. This video, I'll put it in the Discord, in my Discord. I'll put it in there. Yeah, Nick, you looking at SPX all day, so you got the movement already. So, it ain't nothing even to jump into. You know what I'm saying? Yeah, playmaker.
I'm sorry. One more
Go
quick.
ahead.
My bad. One more quick question I wanted to ask. Well, at this point in jump, you would just learn futures and ignore options, or learn options first and futures, or vice versa?
So, okay. This is my opinion. This is my opinion. We have come in and learned the most riskiest way to play options. It's the riskiest thing to do on earth. And then we let it drop to 99%, we're done with that money. The riskiest thing on earth. So the main focus is to learn the price action. Okay, you learn the price action, the Fibonacci retracements. It's showing you what is my entry, where is my potential target, what is my stop loss, where do I absolute, if it goes past this level, I'm expecting it to continue in a certain direction. What am I doing? Then with that, you're already ahead of the game for futures. Then if you really, really want to, which you're probably not going to, is go backwards. And I'm sure Shay will say something about this, maybe a little bit, probably. She came with futures, went back to options, got there, tapped on the head a little bit, and then came right back to futures. Because here's the thing, when you go from a lot of freedom, not having to worry about Greeks and have 75 different things that can pull my contract down versus price action only and just worrying about market conditions, overall market conditions, any major news that's coming out, anything like that that's controlling the price that you're getting in the contract and making. When you only have to worry about that and you're not thinking in your head, okay, Delta is 0.4, okay, Vega is at $1.30, and then Vega row is over here at 0.25. How much is my contract going to be worth if I move $1? Because a lot of people can't tell you what that answer is. If I come in and say this contract has moved $10, how much is the contract going to be? Who's going to tell you the answer? Nobody. Ain't nobody got those calculations down. But you can go into something and figure that out. Here it's straight up math. I get into ES at 4,000. It moves up to 4,001. I have one contract. I know I have made $50. Simple. If I got in the contract at 9:30 a.m. at 4,000, it only moved $1 by the end of the day. The people that's playing options, they're at negative 99.9%. You are at 1 point and you've made your $50 if you got one contract. And it's not being taken away from you. It's not being decayed. There's no time decay. There's no nothing. You don't have to worry about none of that stuff. You got to worry about events and time. You got to worry about events and making sure that you're not trying to hold between 5 p.m. and 6 p.m. because the market's closed between 5 p.m. and 6 p.m. Those are the only things you're worried about. And making sure you're going in the right direction. Does that make sense?
I got you. Yeah. I got you. So definitely futures, Fibonacci's, and price action. Take it from there.
Yeah, gotcha. And if you need help, we out here. I'm telling you, we out here.
Yeah, I'm gonna DM you and on your Discord. We're gonna chop it up so you can see what's up.
Hey, Trust, what you said, was everything you said was accurate. So when I got into futures, tried to go back to SPX, I was slapped on the head. I went back. And so today I also I was in a futures play. And based on my analysis, I was like, oh, let me test out SPX. And I got slapped again. I said, you know what? That's it. Like, I'm done. Because again, you can allow some retracement as long as your risk management. Mm-hmm. In futures, it's as long as it's good, you can allow that retracement, because once it starts moving in your direction, you're not trying to make up for theta. So futures has completely spoiled me. SPX is ghetto. It used to be Bay. I just love it. So y'all be careful though with those wigs.
And when did you learn the futures?
This month. This month, I signed up for the Halloween special with Elite.
Mm-hmm.
trading funds. Yeah, so this month I only been trading it a month.
Mm-hmm.
So yeah, I can't go back. I want to because I'm very loyal, but with SPX, but now it's a different beast. So even though my Delta was decent, just the TTO that came out of nowhere, like I couldn't
Keep on
make up
coming back each time.
my premium.
Mm-hmm.
Yep. So I'm here to stay.
Got you. Love to hear it. She took the Fib course too, so the Fibs help, and I think you're doing Elliott Wave also. So
Yes, that's correct.
and Elliott Waves, the back end of Elliott Waves, Fibs. So everything that people that you're doing, Fibs are in there. So Jeff, go ahead and get the Fibs, bro. Oh, Mark, one more question. With the futures, are you still charting on different time frames like the options? I usually get in on my plays on 3 minute, 5 minute. You can get on that play wherever you want to get in. And then the H on the 15 and the 1 hour, 4 hour. You can get in wherever you want to get in. And whatever chart makes you feel better to get into it, get in there. Who teaches price action? Learn these fibs and learn the strat. One of these discords that you're in, whatever discord you are in, there is a strat university. Get in that strat university, learn the strat. Get my fib course, learn the fibs. And then you go. You got to practice, because if you don't practice, it's a wrap. If you do not practice, you're gonna sit here and be constantly sitting there bouncing back and forth between, now I want to go back to options, I want to go to futures, I want to go back to options, go to futures. Now when you get it, oh my gosh, it's clear as day. It's clear as day. But yeah, these broad information, get on YouTube. I have a video about that. It's an hour long. Get in there and draw those broad information. Draw every last one of them from the yearly down to the 4 hour. I even got the 1 hour on NQ because it doesn't go back like SPX. SPX goes back to Noah's Ark time. You got to draw them from Noah's Ark forward, or back from now to Noah's Ark time. But NQ only goes back to like 2011 or something like that. So it's not that bad. But yeah, draw those broad informations. All right. Last question. Can you paper trade futures? 100%. Get on over here and get into the Ameritrade and go into their on demand and trade those futures. Get over here. There's a lot of different simulators that have futures trading simulators. NinjaTrader has a simulated one. Most of the main brokerages, the bigger brokerages, have a simulator for that. So definitely can paper trade. Can you use lower time frames? All right. So I hate to admit it, but I'm deep in the ghetto at the 15-second chart sometimes. Because that 15-second chart gets you what you need to get sometimes. You know what I'm saying? So, so I've gotten down to that 15-second. And I use that because that earthquake. I feel like an earthquake. The stuff is shaking. I feel like an earthquake. Anyway, okay, it stopped. So I use that because I'm used to tick charts. So that's another thing you want to look at is tick charts, because the tick charts, when you get the tick charts, when you learn about tick chart, we'll talk about those later too, but tick charts, it gives you a different way of looking at the price action, because the regular candles are based on time, how many transactions are happening in a period of time. Those tick charts, they're telling you each price that is being triggered for the price that somebody's paying for, it's accounting for that. And it's only accounting, so let's say you had a 500 tick chart. A new candle is going to form once 500 transactions happen. Okay, so 500 transactions happen, new candle. You got 1,000 tick, 1,000 transactions happen, new candle. And depending on what you're using, that could be like, because if we had a 300 chart, a tick chart, or a 500 tick chart, you could literally have a candle every 10 to 20 seconds. Okay, so now when you start getting up to the higher ones, you got the 1,600, 1,700, whatever amount that you're using, 3,200 ticks, because 3,200 ticks is more for like Dow Jones because of how much it moves. But you start using those lower ticks, 100, 200, 300, it could be 5 seconds and that's a new candle. 10 seconds is a new candle, because that's how many transactions are happening with futures. So, yeah. Woo! That was a lot.
And
Trust, I had one quick question.
One last one. What's got?
All right, this is the last one. So I just wanted clarity on this. So let's say you marked it at 4,000, right, to get in, and it goes up to 430, but retraces back to 410. Are you saying that you'll still get the benefit of those 10 points?
So let me just make sure I'm following. You get in at 4,000.
Uh-huh.
It goes up to 4030.
Uh-huh.
And it comes back down to 4010.
Yeah.
Am I still making the profit on those 10 points?
Correct.
Okay. So in the options world, it goes up to 430. You get in at 4,000, it goes up to 430 and comes back to 410. You probably losing money. Because you just
Absolutely.
all of that. You're probably at -5, maybe -10%, depending on what time of day. And then it'll go right, depending on what contract you had too. Because if you had, let's say you had the 410 contract and you let it go up to 430 and then come back to 410, now you at the money, you're probably losing money depending on what time you're in the day.
Right. And
The
how
futures-
violent it was.
Right. The futures, it only cares, I got in at 4,000. My difference between the price that I entered and the price that you push that button to get out. That is the only thing it cares about. It is calculating your profit based on, you could have went up 100 points in a day. You got greedy and said, oh, I got 100 points. I want to keep all this. I'm not going to move no stop. No, I ain't going to do that. And then it drops down to 4,010. You just made that 10 points in between there. So that's $500 for you.
Y'all have a great weekend. That's all I need.
I'll keep telling you. I'm telling you. Well, yeah, it's crazy. Can you scalp futures? Yes, you can scalp futures. But again, you're running up your fees. Yeah, commissions. Thank you. Now I have an ATM strategy on here that I use the brackets, and I only go for 1 point or half a point, 2 ticks. Sometimes I'll go in here, let me put 20 contracts on there, but give me 2 ticks. Or let me get 10 contracts with 1 point. That's $500 for that 1 point with those 10 contracts. Or if I want, but again, that's a very dangerous thing, because if I get it in an area that is moving all day, let's go. But if I get it in an area that is not really moving, that stop loss is going to be taking away that amount from me too. And sometimes when I'm on the Zoom, people will hear that ching, 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 ching going on in the background because I got that auto break even on, and it's moving every time that price moves. After that auto break even, it moves with the price. So it's out here with the chain to the chain, and then target field. And then we out of there. And I'm waiting for the next play. So yeah, you can scalp. You can scalp all day. You just got to make sure that you're making the money when you're scalping that's going to cover your fees. Well, I appreciate y'all coming. Thank you very much. Yeah, I know a lot of people have been asking for Futures 101. This is Futures 99.5. And it's a lot more to this. Again, if y'all come down here and learn the fibs, definitely, please, please, please learn the fibs. And I'm not just saying just because. You got people in here that have learned these fibs, and they can attest to you, let you know that these fibs are good. But just learn the fibs, get in here, practice, practice, practice. And if you need help, come to me, let me know, get the fibs, get in the Discord. And if you're in Hungries, we can go in there and talk about it. You're in mine, we can talk about it, whatever you want to talk about it. Or just get them and get it done. All right, just come in here and practice, learn how whatever you're going to trade is moving. Get on ES, start looking at NQ, look at Dow, look at how all 3 of them move. Learn how to read all 3 of the charts, because that's another thing that you want to look at, because you just want to make sure that you're watching all of them, Russell, Dow, NASDAQ, and ES, because one of them is telling you where we're going. Somebody gonna tell you where we're about to go. So just practice, all about that practice. All right. Y'all got any more questions? Send me a DM, hit me up, get the fibs course, and let's get it. All right. I will talk to y'all later.